welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
Most people can learn from mistakes, but only the truly ambitious insist on repeating them for clarity. When you are courting a nice girl, an hour seems like a second. When you sit on a red-hot cinder, a second seems like an hour. That's relativity. Albert Einstein. The world today doesn't make sense, so why should I paint pictures that do? Pablo Picasso. You're born free, then you're taxed to death. If it's free, it's advice. If you pay for it, it's counseling. If you can use either one, it's a miracle.
India's stock market may look like the life of the global party, but when it comes to long-term earnings growth in US dollars, it's been, well, politely average. Marcellus' chart shows that the US, especially its mid-caps, absolutely steamrolling everyone. Meanwhile, India clocks in respectable but unremarkable numbers. Germany, Japan and France trail politely, and China, let's just say it did not get the memo. The real surprise, India's outperformance in returns hasn't come from earnings muscle, just very enthusiastic valuations. India's equity landscape is quietly being redrawn, and the new power centers aren't where you think it would be. Over the last decade, Tamil Nadu has gone full Silicon Valley energy, posting a 541% jump in market cap. Meanwhile, poor West Bengal is still looking for the growth button. Maharashtra and the NCR remain the giants, but their expansion is now being challenged by rising states like Gujarat and Telangana, which are building market cap faster than they build new airports. And the real surprise? On a per company basis, Tamil Nadu again crushes everyone, a staggering 420% growth, while West Bengal posts a number so low that it should come with a trigger warning. Retail investors just hit their biggest quarterly sell-off since 2023, offloading nearly 20,000 crores. A reminder that when valuations look pricey and returns look sleepy, the small investor quietly heads for the exit. Meanwhile, FIIs remain sellers thanks to India's underperformance and a currency that's doing its best impression of a slow motion slide. So what's holding the market up? Not heroics, household savings flows. Mutual funds, insurance, EPF, pensions. Basically every systematic savings vehicle is playing at less, carrying the market on its shoulders while individuals chase gold and silver's shiny year. But here's the kicker. If India wants serious foreign money back, it needs a sharper pitch. Lower taxes on markets, cleaner policy, tech innovation, and maybe even a trade deal or two. If you ever wondered where Wall Street really lives, here's a hint. It's not Lower Manhattan, it's Bangalore. Just look at the headcounts. JP Morgan, 60,000 in India, Citi, 33,000, Bank of America, 29,000. At this rate, the only thing still exclusive to New York might be the bagels. So what's driving this? Well, President Trump's squeeze on H-1B visas basically told banks, outsource or get outsmarted. So Wall Street did the obvious. They flew over the visa wall and set up giant talent factories in India. Now India's GCCs are printing money faster than analysts print Excel errors. Revenues jumping from $40 billion in FY 2019 to a projected $105 billion by 2030. India's remittances have officially gone beast mode, hitting $36 billion in a single quarter, the highest ever. That's not a money flow, that's a financial monsoon. After a lull through 2020 to 2022, this chart suddenly looks like someone turned on a turbo mode in 2023. And now in 2025, NRIs are sending back cash like they're trying to single-handedly fund India's capex cycle. But here's a twist. Trump slaps a 1% tax on remittances, except for those routed through banks. And guess what? Indians responded exactly as you'd expect. They shifted NMOS to legal banking channel transfers. In the 2025 electoral race, LVMH isn't just leading, it's basically lapping the competition. At $390 billion, it's worth more than Hermès and Kering combined, with enough left over to buy a small European country. Hermès comes in at $223 billion, proving once again that selling handbags at the price of hatchback cars is in fact a scalable business model. Meanwhile, SLR Luxottica, yes, the people who make your sunglasses, has quietly become a $164 billion titan. Turns out, seeing clearly is a luxury after all. Richmond sits at $102 billion, courtesy of Cartier, Mont Blanc, and anyone else who signs documents with a fountain pen. Titan is the only entrant in the top 10 at $38.5 billion. If FDI were gravity, Maharashtra would be a black hole, pulling in a staggering 6.97 lakh crores, more than the GDP of some countries, and definitely more than the combined valuation of every startup pitch rejected on Shark Tank. The southern powerhouses come next. Karnataka at 4.46 lakh crores, Tamil Nadu at 1.15 lakh crores, proving once again that investors love good infra, predictable policy. Gujarat at 3.48 lakh crores isn't far behind, because if you build industrial corridors, the money will come, usually with a port attached. Then there's Delhi NCR at 2.96 lakh crores, where investors don't know if they're investing in the capital or Gurgaon, but the check clears anyway. The east and northeast remain mostly light shades on this map. Assam at 179.67 crores is an exception. China is not just leading the skyscraper race, it's killing it. With 3,585 buildings over 150 meters, China has more tall towers than the next 10 countries combined. That's not urban planning, that's vertical dominance. The US follows next at 929, solid but nowhere close. Then comes the UAE with 345, a reminder that when a small desert nation has big oil money, everything goes straight up. Southeast Asia is a surprise powerhouse. Malaysia at 327, Japan at 284, and South Korea at 281, all building skywards because horizontal space is overrated. India sits at number 11 with 134 towers, respectable, but for a country building cities at turbo speed, this is just a warm-up lap.